Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And about 2 minutes away from the end of that trading day, Taylor Riggs, Sonali Basak, Eric Balchunas, we are still here, and we are still counting you down to the closing bell, here to help take us beyond the bell with our global simulcast. Yes, Eric, our third.
They never stop, Eric.
How many of these are there?
Katie Greifeld, we bringing in our global Bloomberg TV, radio, YouTube audiences now. One day we'll be in the metaverse, right?
Yeah, well,
Aren't we already?
That day has not come yet. I've been asking our guests all week if the bottom is in. Quincy Crosby giving us a pretty good answer just now. She's chief equity strategist at LPL Financial. She said probably not yet. Your market's nervous, but we're not seeing the breadth that we need to see in terms of stocks moving higher, the number of stocks moving higher, the proportion of stocks moving higher in the S&P 500 that she needs to see in order to tell us that the bottom is in.
Maybe markets are nervous. I feel excited when we think about what's ahead. But if you look at today, though, the trade kind of uninspired, like we were talking about. Volume, too, much lower. Turns out it's a Friday in August. I guess everyone's at the beach.
Yeah, we're still marginally higher on the week for the S&P 500. And, you look at some areas that are still in the green, the Russell 2000 today. It's not all bad news out there, but you've got to worry and wonder about what capitulation looks like and if we've even hit it yet.
Yeah, and you look at the VIX. We've talked about the VIX not really doing much. I think when you talk about the retail investor, they're still buying, and that might give the market some stability. But the VIX ETPs have not seen the jump in volume you tend to see on days where people are freaking out. So I don't really see a lot of fear in the market, at least according to the ETF volume.
Well, and Eric, that's interesting. Jason Draho was just talking about that it's really interesting to see a little bit of some downside movement here without sort of a full spike up here that we see within the VIX. Tim, I'll give you some settlement here. We're shaking up the Friday, shaking up the week as well. And S&P, I'm going to call this unch. We're only down 7 points, 0.2%. A Dow that's a little bit positive, you're up 75. And NASDAQ, clearly that's the big underperformer here. You're off about 0.5%. But do you expand out, Tim, take a look at this. The clear outperformer, the small cap, domestically focused stocks, the Russell 2000, the big winner, 0.8% higher on the day.
Yeah, taking a deeper look at the S&P 500, Taylor, we saw about, 60 stocks at this point move more advance rather than decline today. We saw 280 advance, 220 decline. So even though we saw the S&P 500 move lower, we saw more stocks move higher on the index.
Interesting that you point that out. We see maybe a similar narrative when you think about sort of the sector levels, a few deep dives underneath sort of the headline index. And Katie, for me, sort of what is green is in green, and how sort of risk on does this feel? Energy, again, up 2.2% on the day. Financials as well, when you think about some of the movements that we've had within the yield curve, at least for now, higher rates is the narrative that banks are holding on to. You come down to the bottom of the screen. I sound like a broken record, Katie. It is big tech, the classic long duration assets without a lot of that cash flow. That's why we call them those long duration assets. Those are the red on the screen. You're off about 1% or so on the day.
Well, let's go back to energy. Let's go back to banks, because that definitely makes up a lot of my movers here. You have Constellation Energy, for example, up 10% today. The stock got an upgrade from UBS. Analysts there see the nuclear production tax credit in the Inflation Reduction Act of 2022 as very likely to pass. Constellation, in that scenario, essentially becomes a long-term contracted asset. That's according to UBS. Shareholders seem to like that. Again, Constellation popping 10%. JP Morgan, too, huge rally in the banks, as Taylor just walked us through. JP Morgan, no exception, up 3%. Just one of several banks rallying today as treasury yields surged on the day. And I also wanted to highlight Kellogg's because they reported earnings yesterday, beat estimates. Americans still eating cereal. That earned an upgrade from Piper, and that boosted shares by about 1.7%, Tim.
Katie, you missed AMC today.
Oh, my God.
Rallied 19%, the most since March. Is it the return of the meme stock?
Did you say that?
Yeah.
Maybe. I mean, we have seen a lot of retail traders out to play today.
Hey, I got the decliners. Let's talk Warner Brothers Discovery, ticker WBD. It's having its worst day ever, but you know what? It's only been trading in the public market since April, down 16.5%. The company did post a second quarter net loss on sales that fell well short of estimates, but it's a strategy shift. So enjoy HBO Max as it is while you can, because come next year, it's going to combine with Discovery Plus, and yes, it's going to be more expensive. Shares of Amazon, got to check in on those, finishing the day down by 1.2%. Interesting to see the big news this morning that Amazon would buy iRobot. It's the maker of the Roomba vacuum for $1.65 billion. It's pushing into internet-connected home devices and robotics. Perhaps it'll help it map out the homes of people with Roombas to get a good understanding of what they might want from Amazon. Virgin Galactic, too. Got to check in there, finishing that down by 17.5%, having its worst day in about 6 months. The space tourism company, again, delaying its commercial service, calling for a launch in the second quarter of 2023. So it continues to push that launch out forward.
Maybe instead of the metaverse, we'll be broadcasting live from space.
Sounds more
Space
fun than the
tourism.
metaverse.
A girl can dream.
No, never more fun than being at 731 Lexington Avenue, Tim. How
That's
dare
true.
you? Take a look at fun in the bond market today. Yields higher, huge. When you think about 20 basis points here on the 2-year yield, finally back up to a 224. I think interesting, I want to be careful about how much of a big deal I make about a 10-year yield. You're up 14 basis points, but Sonali, we're still at a 283. And I think it's important to remember that at the peak of sort of the rate hiking cycle that we'd gotten, the 10-year was at a 3.25. We now then rallied back down to a 260. So we make a lot of sort of the intraday moves back up to a 283, but I mean, really, we're right sort of in the range that we've been in the last few months or so.
Totally, and you and I are always on the same page on this because you look at the yields and you look at the 210 differential and you look at that deeply inverted yield curve, even more inverted this week. And you think about that big move in the financials that Katie was talking about. Why is the financials benefiting from this? Because they lose billions of dollars when the yield curve is inverted that deeply, as well as a potential recessionary signal that could also hurt a sector like that that's considered defensive.
You know what's interesting? Tim, sorry to interrupt.
That's okay. Go for it.
But, you know, in terms of thinking about the yield curve and the fact that, you know, you've seen short end yields rise so much more, theoretically that being bad for banks, I don't know. If you think about the corporate issues that we've seen, it feels like companies are going longer and longer out the curve to borrow. If you think about Meta, if you think about Apple, 40-year securities. So a little bit of a trend I noticed.
Yeah, a lot of notable moves to the bond market this week on the corporate side. Hey, I want to talk a little about inflation and move to next week because we get that CPI print. And Taylor, you mentioned still set to be pretty hot at what, over 8.7%, 8.8% at this point. Quincy Crosby over at LPL Financial, she said, okay, we're starting to see food prices come down. We're starting to see oil prices come down, gas prices down for what, 50 days in a row at this point. If that number comes in below what the market thinks, then we could continue to see a risk on day when it comes to stocks.
And I'm going to go back to bonds real quick. You know, you talk about the short end of the curve. For the past 3 months, people have been selling their short-term bond ETFs and going to the longer part of the curve. You know, that phrase duration rotation, I think, is back in play.
I've heard you say that a few times.
You like it, I know. You've stolen it,
well,
actually.
It rhymes.
But I'm okay with it. Because I didn't invent it.
Eric, what are we gleaning, though, from the flows that you've been tracking in and out of bond funds?
Well, if you're on the short end, that's right where the Fed is raising. So it's almost like I get people scrambling out of there. But people are interested in getting protection, and treasuries are a safe place to go. But in July, people left treasuries and went to risk assets. But I bet we're going to see them come back to treasuries, you know, as they have been doing all year, minus July.
I'm going to
Credit
give
ETFs, though.
I'm going to give a little bit of a teaser here because I know we have some scoopage coming out on Monday because there is a floor here. There is some support to higher risk assets, big buyers who are coming in to those credit risk assets, the high yield market in particular. I know, Taylor, you and I have been talking about that a lot too, that there's been support there. Spreads have not widened like crazy, and there seems to be more support ahead.
We're finding support in crypto, Katie.
You know, maybe we are, though. It is interesting to see Bitcoin rallying today, holding on to gains. I know you called the S&P 500 on 0.2% lower, but to see maybe a little bit of divergence between crypto moving in lockstep with equities, I don't know. I've heard one day doesn't make a trend, so we'll see.
Yeah, Bitcoin right now, what, 22,883, so up 1.6%. But Sonali, like Taylor said earlier, this doesn't close for the weekend, so we might see some big moves on the weekend.
You know what makes me laugh a little? Coinbase has added like $6 billion to its market value this week alone, almost $7 billion. And it was with the support of BlackRock, which has lost several $1 trillion in assets under management this year. So it looks like all the players are banding together to make it through this cycle.
We push forward to Coinbase earnings next week, Tim, Disney, as well as the CPI report as well.
All right, it continues. In the meantime, have a great weekend, everyone. That is going to do it for our cross-platform coverage for the day. Don't worry, Eric, this is the last simulcast. Have a great weekend, everyone.
I actually like
We'll
them.
see you same time, same place on Monday.